Welcome to the 43rd episode of Metaco Talks, and it's a great pleasure to host for a second time Rajeev Tummala, Head of Digital and Data, Asia and MENA at HSBC Securities Services. Rajeev has been with HSBC since 2018, and he has been instrumental in helping establish HSBC as a leader among financial service providers in the digital asset ecosystem. He's engaged with clients and financial market infrastructure providers to create solutions for custody, issuance, and asset servicing of digital assets and tokenizing traditional assets. He believes in a future where all assets are programmable assets, bridging a step change in efficiencies to the asset servicing ecosystem. Rajeev, welcome back again to Metaco Talk.
Thank you, Seamus. It's wonderful to be back, I should say. A lot has happened in the last 2 years. Let's basically have a conversation around what's happened, what did we talk about 2 years back, and what the future holds. And before I begin, I think I would like to wish everyone a fabulous 2024, a year full of happiness, peace, giving, and growth.
That's super. Yeah, I think the last time we spoke was October 21, and that was one of our early Metaco Talks, and I think you had some profound predictions or profound statements or let's say provocative statements, particularly from a bank, that everything will sit on chain at some point. All assets will sit on some form of ledger. Interesting, 2 years later, we hear that almost as a mainstream thought now. So we've really, as you say, things have changed a lot in the last 2 years. Some things though haven't changed. Tokenization still hasn't taken off. It's always been, I often joke that it's been the next year's opportunity for the last 5 years. So I think I'm going to pose it to you. When will this take off? When will tokenization be the thing that actually fulfills its promise, please?
Yeah, I think it's important for us to sort of reflect on what did we speak about in the October 2021 talk. Right? Yep. We did speak about all assets would be represented as digital assets in future. Thankfully, we did not put a timeline in that conversation, and we spoke about programmable assets and ledgers that are programmable or ledgers that enable programmable assets. Now that definitely has become mainstream right now. Everyone talks about programmable ledgers or unified programmable ledgers. Assets being real world assets being programmable is also a mainstream thought. So we got some things right. When it comes to sort of tokenization of either financial market securities or real world assets, that definitely, right? So we have to say that while they are taking a larger share of mind and thought in this ecosystem, they've not taken off as much one would hope so. And I would basically say that I'd like to take a view of what I would call as a platform shift and a paradigm shift. And platform shifts have got more to do with enabling infrastructure. And one of the primary reasons I believe is that we did not see the enabling infrastructure take significant adoption, right? So that is probably the word. Without the adoption, you can't basically have applications taking off. So, and blockchain or distributed ledger technology is both. It does require, right? It can be looked upon as a platform shift of how the financial market infrastructure runs, right? What platforms is financial market infrastructure running on? It is a platform shift. And, then it also enables a paradigm shift of how you deliver, how you issue services on the top of that infrastructure. So with more examples, right? So you can see that there could be one or two platform shifts that enable a big paradigm shift. What has happened here is we had both running in parallel in case of blockchain over the last 8 years, right? So let's basically take off in 2018. Different applications that sort of predict paradigm shifts sort of take off, but then they don't scale as much. Primarily because this is supporting infrastructure processes, governance does not come along. And then, while it runs for a bit, there's no scale. So then but it proves an important point of the implications of coming paradigm shift. And that's been very interesting from my point of view, saying that, okay, how does some of the activities that we perform today, how are they poised to change? What implications do we have? Why is it a step up? Right? It's the positive thing is it's not theory. You actually see in practice for some applications, right? So it be it DeFi on public blockchains. They show you what is possible. Yes, there are the assets that we are primarily we want to be participating are not yet there, right? But they show you what is possible. But I do say that it is not taken off. Primarily, I would say that the platforms that would enable the adoption have not gone in. And the other thing, let's basically take an example. I think we spoke about it before as well, cloud, right? So even cloud, when it comes to financial markets or financial services industry itself, they had to create a financial services industry specific version of cloud, right? So there are domain specific infrastructures that would come in, right? So to basically speak at a slightly higher level, and the platform shift would happen when you sort of customize the infrastructure, and now in form of private or permission blockchains or infrastructure that is currently being enabled by firms like Metaco, that offer enterprise grade solutions, but that is inside the firm or on their cloud. The adoption is ticking up. Look at the number of enterprise clients you have today, Seamus, versus where you were in 2021. Number of the activity that is going. It sort of tells you the direction of travel. It's gathering momentum. We always want to compare ourselves with the fastest growing thing in the marketplace, right? They're all in direct to client space. They all acquire ChatGPT, 100 million clients in a couple of weeks, right? So it will not be of that nature, because you got to look at a couple of segments in the economy. Healthcare, financial services are quite heavily regulated. So platform shifts do take time, and hence paradigm shifts will also follow through, but got to be patient.
Well, you've touched a little bit on it.
Yeah.
Clearly, as you said, the market the past 2 years, you can see some of the, let's say, platforms emerging. But you've come into me privately before, basically, that you see paradigm shifts in a number of phases, and you've touched on a little bit what you just said. Can you be more explicitly go through how you see those phases?
So I think so there are two types of paradigm shifts, right, that don't have legacy governance processes, or assets created from the activities, either today or in the past. Something completely new sort of takes off, right? So as an example, or we can basically look at how you have to have. I believe that paradigm shifts happen in sort of three phases, right? So and those you got to have infrastructure to transition in the old, all right, so or the current, and that would give you ability to transform the way you do. You're still doing the old way, but you transform the way you deliver services, right?
Yeah.
So first is transition, and then you basically transform, and then only the paradigm shift comes through, which is to reimagine things how you do. So if you primarily imagine, if you were a ride-hailing company or a taxi company, and then the smartphone came through, your app never would have thought about, how you basically order a cab today, which is via your on demand, right? So you still have an app, right? So you transition, you would have an app to book, or you would have an app to call, or text. My location is this, and then you would basically do a chat with someone on the other side of the infrastructure, and then they'd get a cab. You were not able to track the cab coming to you. That is transition for me. New infrastructure, a bit more convenient, and then comes along, a bit of transformation, right? So someone says, hey, I can sort of show you where your cab is, in how many minutes it's coming through. And then, at some time you basically go to this on demand, even the price changes, demand,
Yes.
search pricing and everything. That's complete reimagination, right? It's 3 phases. So you transition your old practices onto new infrastructure, you transform, and as you transform, the incumbents that are sharp are the new entrants, right? So that's the good thing about platform shifts is they open up an opportunity for breakthrough to new entrants and incumbents as well, right? So it's about now the curve where you are on the adoption, etc. For some segments, again, financial services regulated, you will have to basically wait till the Gartner hype cycle is there. During the steep phase, is the incumbents. The incumbents probably are a little behind. The new entrants are the ones that are going, but as the thing the hype dies down and they go into this stability phase, is where the incumbents start to gather momentum. And then, there's primarily where, post the hype phase is where I think you'll have abundant of talent for you to sort of work with. I think speculation in the hype phase sort of establishes a capacity for that particular technology, right? So all those things happen, and that is when I think paradigm shifts happen, because there's enough capacity that was created due to the hype. So hypes do have a silver lining, I should say. The speculation leads to capacity, and then that primarily sets you up nicely for the paradigm shift. But you got to be thinking through these frameworks to say, the value is established, sometimes not at scale, and you need to look through that.
It's funny you talk about the Gartner hype cycle. We often talk about, a lot of good comes out. I mean, you get that investment in building infrastructure, that first phase. Now, if we bring down that kind of that phasing to tokenization, you think about infrastructure to support tokenization. Clearly, tokenization is more than just issuance. I think I've heard you say this many times. It's more than mint and transfer. There's a whole ecosystem around it. Now, we've seen a lot of firms, firms such as HSBC and some of your peers build out digital asset capabilities. Is the baseline infrastructure there now, so we can begin to think about scaling and managing the full life cycle of a tokenized asset?
I think I would primarily say that the baseline infrastructure that covers the entire life cycle, right? So we not basically, like you said, right? Mint, burn, transfer is the easiest part of the asset life cycle, right? So, and sometimes I think what we actually look at when we actually look at the entire life cycle, it sort of holds us back, right? So we just look at the amount of work that is to be done, and then inherently the large organization cost structures are not. Then someone will basically go out and calculate the investment required to completely transform, right? So again, sometimes we make ourselves our job pretty hard by basically looking at the cost of transformation or looking at the cost of reimagination versus we sometimes sort of tend to overlook the transition phase. And that's primarily where I think we have to begin with, right? So for me, it is healthier to look at the transition stage, to have the minimum viable infrastructure in place and work with assets that right? So the challenge with distributed ledger technology was suddenly created assets that large financial institutions were not known to be working with. So platform shift itself is hard, right? Getting in new platforms, getting in the infrastructure to represent your traditional assets as programmable securities, that itself is challenging. And now we introduce a new asset class add regulatory uncertainty to it, right? So, those things are additional challenges one has to go through. But now we are clearly seeing everybody recognizes the potential of this particular technology, the efficiencies it can bring. And more importantly, I think it sort of enables accessibility to assets. Right? You don't need to go out and create a new algorithmic asset. You can basically take the traditional asset, and owing to efficiencies and removal of overheads, you can begin to trade small tickets, right? So I do think the part of the world I live in, I just call it the growth is going to be there in low value, high volume businesses. 90% of new growth is going to come from there. And traditionally, all of big institutions are used to be doing relatively high value tickets and low volume. And new growth is in the other end of the spectrum. And technologies like distributed ledger technology actually remove the overhead of that. The infrastructure is not yet there, all right? So we have seen significant upgrades to the infrastructure, but I don't think it is at a place where you could call this infrastructure is commodity, right? Or this infrastructure is not. It's still looked upon as specialty infrastructure when nobody bates an eyelid when we talk about a mobile app or the need to develop a mobile app, and it's not. The whole of the smartphone ecosystem is less than 15 years old, right? It was 2007 when the first iPhone came through, and that was the breakthrough. And look at the number of new businesses that have come through because there were enabling infrastructure, right? Mobile succeeded because there was chip manufacturing that basically come through. Battery technology came through, cloud came through, and all of them put together created maybe 2 or 3 platform shifts that enabled that huge paradigm shift. And that was, again, right? So we should not forget that was direct to consumer. And that's been the hallmark of, anything that has happened after 1990s. The new technologies that got adopted were direct to client. And blockchain also was the same thing, right? You had a huge wave of client adoptions. And now large institutions realize that there's a whole segment of clients that are native digital and they want instant settlements, instant payments, instant almost everything, right? So produce value as close as possible to the moment of demand, and distributed ledger technology is one of the enabling things. So yeah, it is coming through that the infrastructure that is required for completely supporting the asset life cycle is being put together. I don't think there is any library. One way to look at it is, are there any software libraries on blockchain that fully support the asset life cycle? I just need to take and tweak. I mean, you and I know. No, they don't exist today. And that is a sign. Maybe it is an opportunity, but that's a sign of missing infrastructure, right? I don't need to be plumbing the gaps of asset model is fully in the public domain. Everybody knows how a traditional asset behaves, right? But, to basically move to transition, going back, I need infrastructure that basically models an existing asset class. Maybe the S&P 500 stocks as instances of programmable securities. It's not available yet. So we are going to probably, the settlement cycle should shrink. That should create the demand for transition infrastructure. It'll come through, right? So we are seeing markets moving to T+1, T0. A lot of these pressure points would mean that we'll have to come to an enterprise provider like you and say, hey, I need a new core banking ledger that is going to support all these features, right? And then the commercial opportunity will come through that, I think.
I'm gonna pencil you in right now for another appearance 2 years from now to see if we mark to market this again. But we obviously, speaking of the time these things take to happen, we first started talking in 2019, you and I basically. So it's been a 4-year journey with HSBC, and I know internally you've been an evangelist within HSBC, one of the largest FIs. I mean, I would describe it as, 15, the aircraft carrier, I'm sure, is in many ways is kind of the theme. You've been educating stakeholders, securing buy-in for that journey. I think, given our audience is typically from your peers at other organizations, large organizations, is there any advice and any takeaways from your journey, how you can get this done? Because you finally achieved, it's HSBC in this now, basically, right?
Yeah, we are in, right? We are traveling, we are on the path.
Yeah.
But I think the way we have approached, again, that's going back to, it's a platform shift for managing assets, right? So that's primarily has been I don't think 2 or 3 years ago, I was so clear, right? So, or maybe 5 years ago, I was not. But the way we actually saw it, and we do have a large asset servicing business, and that helps us understand fundamental changes probably a little better. And because if you're heavily front office focused, there is a lot of low latency activity out there, and you think that, what else is there out to sort of outshine. or I know what would a
very
new
good.
platform do, right? So whereas if you have a large asset servicing business, you don't just buy and sell the asset, you basically end up servicing its life cycle.
Yeah.
Equities never expire, bonds, pretty long. And then you basically get to see a variance. Is the blessing of being in Asia is not every market, not any market is the same as the other market. So you always think that technology is required to harmonize. And one of my takeaways, or in very initial days, my exposure was I just looked at the ledger and say, hey, this is a new type of doing ledger technology. It's a simple thing. We had books as ledgers at some point in time. You go to an HSBC branch, there will be a picture of a ledger that they used when the branch started about 120 years ago. And then databases came along, and then after a while, the 70s and 80s, they became the source or the platform for creating ledgers, right? So, and then we ended up recording asset ownership, asset attributes on these databases, right? We went in from books. The transition was that you basically modeled your data model or database tables and everything on what was there in the physical books. That's the transition, right? And then it basically came along neatly, I should say. But when I saw the first potential programmable security, I just thought that today's securities are some entries in a database, right? So they just are not very intelligent. We automate, but we automate how we manage asset life cycle is a lot of independent or discrete independent steps automated, and then there is handover. But right. The asset itself does not manage its life cycle, or it's not a program. And then we didn't have that infrastructure. And when I saw the DLT, the only thing I said is this is primarily a platform shift towards better ledgers and creating better asset formats. That definitely resonates, right? So you can say, natural progression, we have done these things in the past. This is not new. And, we know, okay, how did we do the last time when we all moved to electronic registers, right? We knew that it was it is an ecosystem play. You need to be able to work with financial market infrastructure. We need to be able to work with clients. And also, right, so because it is, and initially, I strongly believe that it will be a platform shift followed by a transition. So the end clients may not immediately see the benefits, right? So if you're investing you might not see the benefits. So the immediate impact I thought would be on market infrastructure and, participants in the market infrastructure. But then crypto came along and it ran with that, decentralization. The same technology used for different purposes. The core also was, sort of lent towards that particular aspect. I sort of caught the public attention, then it sort of grew in. And then suddenly from a platform shift conversation, that was this could be a paradigm shift. But the assets were not there to support the paradigm shift, right? So 2 or 3 assets, and then, the hype cycle came through. Now I think we are in the stabilization phase. It's funny, yesterday SEC did approve 11 ETFs. So that world is coming back into the traditional finance and ETFs and everything else. So I do hope that will influence, right? Then the technology will have influence on how we do our own operations and processes and what kind of infrastructure we should be having. So now this is coming towards the melding of the technology and process, and there will be more exposure because of that. So
making the case that it's evolution, a natural evolution.
It's a natural evolution, a natural evolutionary process. And once you start to approach that as a platform shift, and that will take some more time because we are in a heavily regulated phase, right? So that sort of adds to the pace, right? So it's slightly slower, and I'm still looking for a provider or a solution out there in the market that can replace thousands of desperate ledgers that we have in banks like ours, right? So maybe that is the UPL that will get the unified programmable ledger, or some other form. But that is the opportunity, I believe. Again, as you say, when we speak in 2 or 3 years' time, we can look at, is that infrastructure available?
Yeah, that's true. So if given that as you mentioned before, you've embarked on the path now, and you look outside in the ecosystem, or you look in the market rather, in the ecosystem. We often hear things. There are certain issues like always brought up that there's no standards yet. There's a lack of standards in the market, and that's inhibiting growth. Is that true, or what's your perspective on that?
No, I think standards and adoption are two interesting aspects, right? Adoption drives standards. I think infrastructure drives adoption. I think what is sort of for something to take on, I think you need to have what I would call the digital picks and shovels, right? And then typically, everyone in the ecosystem does not make the digital picks and shovels. You go and acquire digital picks and shovels, and then we all go to mine, right? So as they say, in a gold rush, if there is a gold rush, you sell shovels. And then, we are in the digital economy, and we'll probably be looking at, digital infrastructure. So this is all sort of interlinked, right? So blockchain infrastructure, I firmly believe that infrastructure based on blockchain principles, blockchain thinking, is one of the digital picks and shovels for the digital economies that will take off. I don't think there is enough of them today, for adopting in enterprise or otherwise. And then from there comes adoption as more enterprises come through. And standards are primarily a function of adoption. I think as more people sort of start to think, so the early adopters are the ones that basically think and form standards. And that makes it easier for late adopters to come in and participate, right? So that's how I see picks and shovels, infrastructure adoption, early adoption. I mean, given the lessons we have learned, early adopters will basically drive some kind of standardization, which makes it easier for the late movers to sort of easily adopt, right? So low friction.
There's less effort on their part. I mean, it's a very sensible explanation. Expanding a bit on other ecosystem questions. I mean, there's the debate around public and private chains, and in terms of TradFi adoption, we often hear TradFi or regulators of TradFi often have concerns about public permissionless chains over performance, potential resiliency, and of course accountability when things go wrong. Whose throat do they choke, basically? Well, we've seen a lot of banks build private chain infrastructure, but that by definition is fragmented and has not necessarily been tested at scale, given it's mostly new technology. And you have, by definition, you're creating silos again. So things like interoperability become a challenge. What are your views on this? How is this going to evolve? How do you view it now, and how do you think it will evolve over time?
Yeah. So you got to basically take a step back and do not assume that the private chains are the ones that are going to be there forever, right? And then banks are all basically, always going to be on private permission chains or, financial market infrastructure. You got to basically look at when a new technology comes, you as a large regulated organization, how do you sort of get comfort? And how do you learn to sort of use this? And a byproduct of, that engagement and education is a permission blockchain. And as you sort of get comfortable with the technology, the enterprise architects sort of looking at it and saying, this has to be, incorporated into our architecture stack, everything else. So there is an organization learning curve that needs to be scaled, you need to pass through. And when I say organization learning curve, it's not just the technologists. I do believe it is the risk stewards in our organizations, the operations team, the product team. I mean, everybody, right? So that is the organizational learning curve. And you have to take the people along, and which is very similar to the journey that we have gone in our organization over the past 3 to 4 years, right? So activity based on permission blockchains basically gets us comfortable around what the technology is, how does it work, and then you can sort of easily understand by analogy how a public blockchain works without actually getting instances of public blockchain into your organization, right? So it is, I think, a form of education and engagement, and constant engagement definitely leads to probably a bit more trust as well with the technology, with the concepts, right? So not everybody is going to be a programmer writing smart contracts, but easily you will understand the implications of assets being programmable, smart contracts, servicing, and you are looking at this in a safe and secure environment. Your clients come in and participate. You have other peers come in and participate. You're demonstrating value that potentially can accrue, right? So, yeah, and yes, that sometimes, as you correctly point out, it can be a digital island. You'll have to go through additional governance processes to get people on, and you can only work with newly issued assets on this particular infrastructure.
Yep.
You have not yet thought through how to transition your entire infrastructure onto this, transition the assets. But that is a very essential step. I think they do a lot of service in terms of helping organizations coming to terms with this new technology, especially where there is a lot of, I think, regulatory ambiguity on public blockchains. And now that is also going away, right? So that's been the hallmark of, I think, the 23 and 24. We speak about regulated public blockchains or open interoperable networks. In Singapore, layer 1, GL1, the concept of global layer 1 was introduced in November. So it sort of tells you, right? I don't think that comfort would have come to a lot of participants in the ecosystem without having their own experimentation, engagement, doing MVPs. Some I think private chains will scale, right? So I absolutely have no doubt there will be a form. It's like various kinds of infrastructure, right? So you have public cloud, you have private cloud, you have hybrid, same thing, right? You'll have different forms of this infrastructure, and different organizations will be comfortable engaging with different types of infrastructure. And as adoption goes, I do think that you will need, in order to address the fracturing liquidity, you will need to figure out, again, with adoption comes the need for standardization. I think you can't have the same format of asset in all kinds of infrastructure. So you will need to figure out interoperability. And if you really look at it, interoperability is a fancy new term we basically float around. But I would say no two banks have the same core banking infrastructure.
Of course. Yeah.
Right? And even if it's a
company, they're different.
Yeah, right. Even a single bank does not have the same core uniform banking infrastructure. And we do interoperate. These systems do talk to each other. We use some kind of messaging layer, right? So Swift is a classic example, right? So it's again, right? So I think sometimes we just think that everything that we do there's no playbook. There's always a playbook. You got to look at how do you want to tweak it, right? So Swift is the interoperable layer between many desperate core banking infrastructures, right? So, and as you sort of get onto this new infrastructure, which hopefully it will be a programmable distributor ledger-led, core infrastructure. What it tells us is messaging need not be the way how you interoperate, right? So you create protocols, and there could be a better way of transferring assets, interoperating, it being interoperable, recognizing each other's standards, because everything is programmable. I do believe there's better ways of achieving interoperability. The other way is to think of public blockchains as that interoperability highway. So you can do everything that you want on your private chain, and you interface with the public blockchains. And on the other end, if there's another permission chain that interfaces with the public blockchain, you have an interoperable layer in form of a utility that's not controlled by anyone. The fact is, we have to get comfortable with infrastructure that is not owned by anyone, that is truly distributed. That's something that we, not all of us are yet comfortable with in the ecosystem. We understand what it is going on, but that's primarily where the choke points are right now.
And to what degree, I think those are super points. To what degree do the regulators, when they provide these safe spaces for institutions, what you mentioned Singapore, obviously they've been quite proactive, Hong Kong as well, and elsewhere, how important are those safe spaces, sandboxes, for that sort of evolutionary, for that evaluation process to get the comfort with the potential future solutions?
Yeah. I think they give you a very safe space to sort of adopt a new technology again, right? So this is a very, it needs a safe space to sort of prove that, how do these scale? How should one also look at the activity that is being regulated, and understand where the potential risks might be, right? So the one thing that I do think is when you start to use newer technologies, newer risks are introduced. There's absolutely no doubt, right? So maybe you end up addressing some of the risks that are known in a much better way, but you also, and sandboxes are probably the place where you endeavor to figure out or to move the unknown into the at least the known unknown, or it becomes known, and then you sort of plug the gap. But they do act as that kind of a safe space where you're translating the unknown into something that you can work with, and critical, right? So the early movers there, I think we have to owe a lot to them, because they are the ones that are sort of finding out, proposing a playbook and getting them to a stage where these are addressed. So more adoption actually leads to less friction for the later entrants, but I think earlier entrants can define the paradigm shift, right? So that's the opportunity they have, and they have a say in how paradigms are. How do you shape the paradigm shift that is coming along? So I think there are advantages and disadvantages of going ahead or not going ahead.
Let's shift the conversation a little bit. I mean, I think one of the, to think about requirements for tokenization, there's obviously the infrastructure side, but that infrastructure extends to how you settle, so the fiat leg or some sort of settlement leg. I think one of the killer apps or the killer successes in the crypto space has been stablecoins. Basically, we've seen the market cap there grow tremendously, and I think depends on which report you look at, but settlements last year were anywhere from 6 to 11 trillion, basically, right? So these are actively used. We can discuss the purpose, and maybe for speculation in the West, and maybe for a wallet in your phone in emerging markets, but it has been a very successful case. But when we look at banks and how we often don't hear so much about the way that's been shaped by fintechs, which is the asset-backed coins. It's more around tokenized deposits. Now, how do you see? I mean, from your perspective, how do you expect this as the banks enter the space? How will they look at stablecoins, or are CBDCs imminent? I mean, how do you view this landscape evolving?
I think for this infrastructure to take off, right? So one of the things that we would need is, one is, yes, I can basically put on the pure asset servicing layer, and then, as long as the infrastructure, has resiliency, recovery, and, we're able to sort of prove to regulators that I can convert all the assets that any bank or an institution works with into programmable assets. It's a pure play platform shift. So like, you're not asked on whether you're running on Microsoft Cloud or Amazon or, lots of things, then this can become it. But for it to take off and also sort of do that paradigm shift, right? It's not a platform shift. You want to get into paradigm shift, you need a cash construct that is native to this infrastructure. And as you know, right? So I do think regulations are coming through, right? So now we have had 2 regulators coming through and basically saying, how does the regulatory framework work for stablecoin issuers, right? So that's an important piece of the foundational layer I think we need for that, right? So, and then that's coming through. And I think, in Singapore during November, I think there were 2 or 3 stablecoins that came through using that regulatory framework. And as these things get adopted, I think that the CBDC, I mean, like, yes, a lot of us are interested in central bank digital currencies, but I think what will eventually take off after the regulatory frameworks that we are seeing stabilize and then allow to launch is probably the C doesn't stand for central, but C stands for commercial. So commercial bank digital money, I think, will come through. And, regulators are always having a view into the balance sheet of the banks, assets and liabilities. The regulated banks are always available. If they end up issuing these things, they basically are away. I mean, they're visible to the regulators. And of course, that every regulatory framework is also saying how will a new entity that is issuing these cash constructs will be regulated. So it's not a very enclosed play. It's an open play. Anyone can come in and issue. I do think that we knew there will be incumbents who will reimagine. So that's again, right? So the reimagine phase would come through.
Right.
Some of the cash services that are often offered. And then that's primarily how this infrastructure will take off, right? So the traditional incumbents will probably look at largely transition and transformation, and maybe the new incumbents will start to, because they don't have legacy, they don't need to transition. They will probably focus on the transformation and reimagination phases a bit more. But ultimately, as these things stabilize, right, so they'll come back to the core banking question, right? So it'll be like, okay, how do I use my balance sheet after the tech becomes commodity, right? So the efficient usage of the balance sheet is then a bank's, strength.
Sadly, we're coming up on time. It's been a super conversation. It almost seems we do this a lot more frequently than every 2 years. But I mean, given that we have that 2-year marker, I think as we wrap up, it'd be interesting to hear how your narrative has evolved over that journey, and some thoughts around how you see things going forward here. Obviously, you've touched a lot about platforms and transitions and paradigm shifts.
But I'm thoughts
before we wrap up.
I'm thinking a lot about. I think the fact that infrastructure will be available is a given, right? So that's what I'm thinking of. I am actually, these days, I spend a lot of time thinking about the reimagine phase of this paradigm shift, right? So I can't just say whether it'll be 5 years from now or 7 or 10 years from now, but it's going to be an exciting phase, I think, reimagination. I do think that there will be a large impact to productivity, right? So that's what I think in the reimagination phase, because one of my own reimagination applications is affordable diversity, right? So I do think for the same dollar I'm investing, I will get more diversity of assets. My portfolio for the same amount of money will have a lot more diversification, because again, right, so going back to my earlier thoughts around this infrastructure will allow for a low value and high volume of tickets. So I can probably invest $50 into a private equity fund, 50 into S&P 500 and 50 into something else that sort of specializes in emerging digital assets, right? So I do think, and this also enables newer constructs like NFTs, which probably are more brand marketing, customer loyalty kind of things. And that also gives new economy businesses a better way of sort of managing their client and customer relationships. The incumbents will also follow through. So it's like being in probably the 2007 and 2011 and thinking of what will a smartphone create, right? So our journey might be slightly longer while the pace of change is higher. But I do believe, owing to the constraints that we are in, that we have, the infrastructure is being put together, right? So it's still early stages of adoption, but it's a fascinating period of time. I think we are setting ourselves up for. The reimagine phase is what excites me, but I am very, very cognizant of the fact that, we also have to think. And today, a lot of my thought is around the $800 trillion asset. How do they transition into this new infrastructure, right? So that's such a huge opportunity, right? And that opportunity is what will basically power the transformation and the reimagine phase. But I think it is a huge commercial opportunity, just transitioning existing assets into this new infrastructure, and that's a big opportunity.
Rajeev, it's an exciting vision. It's been excellent to have you on here, and of course, I'm looking forward to our next conversation in 2 years' time, if not before.
Thank you, Seamus.
Thanks for joining.
Wonderful. Thank you very much.
Likewise. And for our listeners and viewers, thanks for everyone for joining, and stay tuned for the recording and transcript of this super episode. It will be available on Metaco.com. Thanks for joining. See you next time.